Coal India profit plunges 30% amid monsoon disruptions. Coal India reported disappointing second quarter results on Wednesday, with consolidated net profit plunging 30% year-over-year to 4,354 crore rupees. Yet the state-owned mining giant still rewarded shareholders with a second interim dividend of 10 rupees and 25 paise per share. The Maharatna company's performance fell short of analyst expectations across key metrics. Net profit missed estimates of 5,544 crore rupees by nearly 21%, while revenue from operations declined 3.2% to 30,187 crore rupees for the quarter ended September 2025. EBITDA dropped 22% to 6,716 crore rupees, with margins contracting sharply by 584 basis points to 22.25% from 27.63% in the same period last year. Despite the weak earnings, Coal India declared its second interim dividend for fiscal year 2025-26 at 10 rupees and 25 paise per equity share, representing 102.5% of the face value. The company set November 4, 2025, as the record date for dividend eligibility, with payments scheduled by November 28, 2025. Monsoon and weak demand hit production. The company's poor performance stemmed from multiple headwinds, including prolonged monsoon rains that disrupted mining operations and weak electricity demand that reduced coal offtake. Coal India reported a 3.9% decline in production to 48.97 million tons in September, down from 50.94 million tons in the corresponding month of fiscal year 2025. Coal and Mines Minister G. Kishan Reddy confirmed that rainfall disrupted mining activity in September, leading to the production decline. Heavy rains and waterlogging during the extended monsoon created operational difficulties across several coalfields, including subsidiaries Bharat Coking Coal Limited, Central Coalfields Limited, Western Coalfields Limited, and Mahanadi Coalfields Limited. The weak performance was further exacerbated by subdued power demand growth. India's electricity demand rose only 1% in the first half of fiscal year 2026, with coal-fired power generation declining nearly 3% as milder weather conditions and early monsoon rains reduced demand for electricity. Market reaction and outlook. Shares of Coal India fell 2% to 382 rupees and 70 paise following the results announcement, reflecting investor disappointment with the earnings miss. The stock has remained relatively flat on a year-to-date basis despite the dividend announcement. However, analysts maintain a cautiously optimistic long-term outlook, expecting electricity demand to recover in the second half of the fiscal year as weather patterns normalize. ICRA projects India's full-year electricity demand growth to settle at 4.5%, supported by expected improvements in industrial and agricultural load during winter months. The company maintains its production target of 875 million tons and dispatch target of 900 million tons for fiscal year 2025-26, though it faces headwinds from India's accelerating shift toward renewable energy sources.